Hello everyone and welcome to Momentum channel. My name is Mo, and in this video I'm going to be talking to you about three particular stocks that I plan to buy in the stock market in the week ahead. But before we get into it, we're going to take a quick look at the stock market and how it's been performing over the past several weeks and since the beginning of the year. As you notice on the screen, the performance of S&P 500 year to date at the time of making this video is showing to be a negative 13.3%. It is actually down double digits, which results in being in the correction territory for the S&P 500. It has been the worst performance over the past 5 years that you noticed. And if you look at the performance of Dow Jones in comparison, it is down by almost 9.3% year to date. Negative performance as well. But here, given that the amount is less than 10%, it is at the pullback territory at this time for the Dow Jones. As for Nasdaq, it has had the worst performance among the major indexes. For Nasdaq, it is down by 21.2%, in a negative 21% plus. It results in being in a bear market territory as for the Nasdaq. Now, if you look at the Fear and Greed Index by CNN, you notice that currently it is at a fear territory with a score of only 27, just shy of getting to that extreme fear territory. The Fear and Greed Index uses slowing momentum as a signal for fear and a growing momentum for greed. Now, with that out of the way, let us take a look at our first pick for the stock that we intend to buy in the stock market in the week ahead. Let's get into it. All right, our very first pick for the stock we intend to buy in the stock market in the week ahead is the Toronto Dominion Bank with ticker symbol TD. Although it is a Canadian bank and is available for investors to trade in Canadian dollars, it is also available on New York Stock Exchange with ticker TD as well. Here we are showing the price in Canadian dollars. The last trading price for that was at $92.79 Canadian. If you look at the past 1 week return for the stock, was fairly stagnant, but the past 1 month, the stock is showing to be down by close to 7%. And similarly, if you look at the past 3 months, the stock is down by close to 9%. We currently have 9.2 shares of TD in our personal non-registered account, and close to 0.8 fractional shares in our tax-free savings account, and lastly, close to 0.12 fractional shares in our registered retirement savings plan. Now, the reason behind the intentions for buying and adding to our existing shares of Toronto Dominion Bank, aside from the fact that the stock price has actually declined over the past several months, is some more of a fundamental reasons behind it. First and foremost, Toronto Dominion Bank does pay a dividend yield of 3.89%, which is quite decent. It is a safe dividend payer as well, with a dividend safety score of 80 at this time. It is also a low volatility stock with a beta score of only 0.70. Beta score of less than 1 suggests that the stock is less volatile overall when it comes to the stock market. As for the payout ratio for this dividend paying stock, its forward payout ratio is only at 42%, which is still fairly decent, allowing this bank to continue to increase its dividend payments for many years to come. In fact, if you look at their dividend increase history, Toronto Dominion Bank has been increasing its dividend year after year for the past 11 years, and they have been paying dividends uninterrupted for the past 27 years. Toronto Dominion Bank does pay its dividend quarterly in the months of January, April, July, and October. And currently it has a forward price to earnings ratio of 10.8, which, although is slightly higher than that of the financial sector, it is still quite decent and in line with their own 5-year average for price to earnings ratio. Looking at the 52-week price range for Toronto Dominion Bank, and this is the US dollar stock price based on New York Stock Exchange, the last trading price of $72.24 in USD is hovering slightly closer to their 52-week low price, which was at $63.87. Now, let us take a look at a number of additional financial metrics. Earnings per share is the first metric that we want to take a look at. Ideally, we would like to see the company has its earnings per share gradually and nicely growing year after year. Although in 2020, their earnings per share declined, for all the good reasons that we know given the pandemic. In the next 12 months, the company is expected to report $8.44 in earnings per share, which is the highest it has it has ever will have in the past 10 years. Similarly, their payout ratio of 42% is hovering around that threshold and standard mark of 40% for the banks, and is at a desirable level. Looking at Toronto Dominion Bank's total sales or their revenue in $1 billion reported, you'd see how they have nicely increased it year after year for the most part, with the last 12 months showing $43.6 billion in total sales. As for number of outstanding shares, ideally we'd like for firms to gradually have their share buyout so that their number of outstanding shares is less. This is overall appears to be the case with the last 12 months, the business showing $1.82 billion in outstanding shares, which hasn't shown too much of a growth or decline in that sense, and is acceptable in that regard. Lastly, if you look at the return on equity, which measures how many dollars of a profit a company earns for every dollar that shareholders have invested in the firm, here we are looking at the last 12 months return on equity of 15%, and across the past 10 years, each and every year they have surpassed the threshold of 9%, which is the preference for banks when it comes to return on equity. So they get a pass mark on that regard as well. Now, in that regard, and given how solid fundamentally Toronto Dominion Bank is based on the measures that we've discussed, we would like to continue to add to our existing shares, but we're going to do it slowly and gradually add fractional shares of Toronto Dominion Bank to our existing positions. Our second pick is the Royal Bank of Canada, another financial institution from Canada, which is a large bank, the largest bank, in fact, in Canada. It is also available for investors outside of Canada with ticker symbol RY through New York Stock Exchange. This graph is showing the latest price in Canadian dollars, last traded at the price of $129.75. If you look at the past 1 week, the stock was down by close to 2%. Past 1 month, it's down by 5.5%. The past 3 months is showing to be down by close to 10.5%. We do have 5.7 fraction of a shares of Royal Bank of Canada in our non-registered account, as well as close to 1 share in our tax-free savings account. And we would like to add fractional shares of Royal Bank of Canada to our account in the week ahead in the stock market. All right, as for Royal Bank of Canada, available on New York Stock Exchange as well, as we talked about, they have been showing a safe dividend score of 80. Also, they are paying a dividend currently with a yield of 3.73%, close to 4% in dividend yield. Similar to Toronto Dominion Bank, Royal Bank of Canada also has less volatility than the overall stock market, with a beta score of less than 1 at only at 0.62. It has a market capitalization of $142 billion, making it a mega cap size business. They have a similar payout ratio of 42%, similar to that of the Toronto Dominion Bank. And if you look at their dividend history, we are looking at a similar storyline. Here, we are looking at 11 years of dividend increase year after year, and they have been paying their dividend for the past 27 years. As for their dividend payments, they do pay it quarterly in the months of February, May, August, and November. And if you look at their forward price to earnings ratio, which is at 11.3, it is near their own historical norm, which results in the stock looking reasonably valued for investors. This time, the forward price to earnings ratio of 11.3 is slightly higher than that of the financial sector as 10.2. As for the 52-week price range for the stock, this is in US dollars. The last US dollar price of $101.03 is hovering a lot closer to that of their 52-week low price. The lowest price that the stock has hit in the past 1 year was at $95.40. As for looking at some of the financial metrics, let us take a look at earnings per share. They are estimated to report $11.30 in terms of earnings per share, which is similar to that of their last 12 months, and one of the highest level they have reported in the past 10 years. As for their total sales, you see that kind of overall virtually nice increasing growth to their total revenue, reporting $50.6 billion estimated for the last 12 months. As for the number of outstanding shares, they have declined for the most part their number of outstanding shares, and they are now reporting one of the lowest level of outstanding shares that they've had in the past 10 years at only 1.43 billion outstanding shares. Lastly, looking at the return on equity, it is well surpassing the 9% threshold for banks, which they are currently showing a return on equity of 17%. which has been highest amount that they've had over the past 10 years. And it's a positive metric as well for us to look at. All right, our third pick is an index exchange traded fund available in Canadian dollars for investors. It allows investing indirectly in high quality Canadian dividend paying stocks. And it's the one that we've been buying and adding to our existing positions, and we intend to take advantage of the lower prices that the market is offering currently. It is no other than VDY, or Vanguard FTSE Canadian High Dividend Yield Index ETF. The last trading price for that was at $45.23 in the last trading day. Before the weekend, it was down by 1.5%. Looking at the past 1 week, the stock is showing to be down by close to that 1.5%. The past 1 month, it is down by close to 3.9%. And in the past 3 months, it's fairly stagnant by down about 0.5%. If you look at longer term horizon, though, it's still 1 year, it's showing a positive return of 17.7% for VDY. What's unique about VDY is the fact that it does pay a dividend, and the dividend distributions are paid on a monthly basis. It currently has a distribution yield of 3.62% annually. Looking at the past 52-week price range, the lowest that the price for this ETF was at $38.27, and the highest was at $48.03. As for us, we do have 28 shares of it in our tax-free savings account. It is showing to be down by almost 4% for us. And in our registered retirement savings plan, we have 2 shares. It is down by about 2.5%. We intend to add to our existing shares of VDY in the week ahead, but we will do that gradually and not in one shot. We might be adding 1 share or 2 shares perhaps on Monday and see how the market reacts, gradually adding to our existing shares to building a much larger position over time. Lastly, before I end the video, I wanted to share quickly with you my dividend income in the past little while. The latest dividend income that we've had last week was from Bank of Nova Scotia. We earned $16.18 in dividend income for our non-registered account. We also earned 81 cents for fractional shares that we have in our tax-free savings account. Some of you may also know that I have a passive investment portfolio as well with Wealthsimple Invest. That's a portfolio or robo-advisor that allows investing in the stock market, depending on your risk tolerance, passively, totally passively, just by depositing fractional amount of money, let's say even as low as $1, and gradually through the robo-advisor service, it would invest in the stock market for you, depending on your risk tolerance as indicated. Now, over years, I have grown this portfolio to a much larger size. At one point, it was close to $60,000, but over time, I've withdrawn some funds from it using for different investment purposes. And currently, the total balance is hovering closer to the 6,400 mark. If you are interested in investing passively in the stock market through such a portfolio, you are more than welcome to use our referral link, which is available in the description of the video, but also shown on the screen. It allows you to take advantage of the offer, which allows your investment for the first $10,000 up to that amount to be managed for free for 12 months, which is a great offer. After that, with 1 year, the fee that Wealthsimple charges for offering their services is only 0.5%, which is again very low fee for making it super easy and simple for investors to invest in the stock market without literally having any knowledge of investment. It just makes the process of investment so simple, as the name suggests, Wealthsimple. It is a service that I've used and I highly recommend it. Well, there you have it, folks. A quick look into 3 high-quality stocks and ETFs that we plan to buy in the stock market in the week ahead. Let me know what your thoughts are. Are you planning to buy any new position in the week ahead, or perhaps sell your positions? Or maybe you're waiting on the sideline and just watching gradually and building a larger cash position? I would love to hear from you. Be sure to leave me a comment down below and let me know what you think. As always, if you enjoyed this video and gained something of value from it, don't forget to smash that like button and share this video with someone else who might benefit from it. And of course, subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, as well as conversations and interviews with folks who have successfully reached financial freedom or early retirement. Thank you once again, and I hope to see you next time.